So that's a little bit of a background of what today's audience is thinking about. So let's kind of move forward here and start to take a look at our economy and how it is going. And we'll start at the macro level with Andy Bauer. Andy is the Vice President and Regional Executive for the Baltimore branch of the Federal Reserve Bank of Richmond. He has an in-depth understanding of the regional economy and the policies that the Federal Reserve takes care of. And they're focusing on monetary policy and have done some extraordinary things during this unusual economic time to help keep the economy going. Andy comes with a great background and experience. He has a BA from American University and his PhD in economics from Emory University. So now I'd like to turn it over to Andy.
All right, thanks, Mark. So I thought that poll was great, especially that last question, because rare is it that the economist is going to be the more optimistic person in the room. And so I'm not sure what that, I'm not sure what that bodes, what that says, but I find that fascinating. So right, so I'm with the Federal Reserve Bank of Richmond. A lot of people don't know the Richmond Fed at the Federal Reserve System. We have this odd system where we've got 12 regional reserve banks along with the Board of Governors. Together, the FO, the Federal Reserve System, is responsible for monetary policy, supervising banks. We actually do community development as well. 8 times a year, my boss, along with the other Federal Reserve Bank presidents and the Board of Governors, get together and they decide monetary policy, that is, lowering or raising interest rates, as well as doing a number of other things such as buying assets, providing forward guidance on where rates are going to go in order to conduct monetary policy. So, I'm responsible for Maryland, DC, West Virginia, and I just kind of give you that background because we have this district, and a lot of the way that we go about monetary policies. Obviously, we watch a lot of data. We've got some great researchers who think deeply about growth, the business cycle, inflation. And based on their research and understanding the literature, they've got certain views, certain models that they think best reflect how the economy works. The data, obviously, you plug in the data to those models, and that's very helpful. But a lot of how we kind of get an idea of what's going on in the economy is actually just talking with businesses. And so I spent a lot of my time it used to be meeting in person with businesses, but now it's on the phone or on Zoom calls, meeting with businesses and having interviews anywhere from a half hour to an hour, where I'll sit down and say, so what's going on in your business? What's going on with revenues, sales? What are you doing with prices? What are you doing with labor? And the bank president's doing the same thing. And so I've got 2 other counterparts, 2 other regional executives in Richmond and Charlotte. And so all of us are out there gathering a lot of information from the business community to get a good sense in real time what it is that they're seeing, how they're adjusting to things, and really what's more importantly, what are they expecting for this year given what we know about the economy. And those expectations are really important because you can look at data and other surveys, that's not going to tell you, not going to give you as much of that forward-looking information about what's going on in the economy. So a lot of my views on what's going on in the economy reflect not only what we're seeing in the data, what my colleagues are thinking about as they think about theory and models, but it also reflects a lot of what we're hearing from our business contacts. So just to, again, I'll give you a brief kind of overview of kind of where things have been, because I think the context is important. Give you some of the more recent indications, which I think are all very positive, and then give you some thoughts on what we should expect this year. And I can give you my baseline, and then which is probably very optimistic given the poll, and then give you perhaps a less optimistic scenario. So anyways, I think what's really important to note is that, and we all know that the disruption to the economy last year was huge and unprecedented. I didn't bring my charts today, which I feel somewhat, I can send them to you because the charts are actually fantastic, and most people love it when economists goes through a slide deck of charts. So I feel like I've cheated you in some way, and I apologize for that. But the disruption was just tremendous. I mean, real GDP declined at a 31% annual rate in the second quarter, which again, is, something we haven't seen in the history of the country. The rebound was much stronger than expected. And what's really interesting is that a lot of things, I mean, especially given where we were in April and May, things rebounded a lot better than expected. Particularly true if you look at just the aggregate indicators for like real GDP. It rebounded 33% in the third quarter, right? And then in the fourth quarter, despite rising cases, people saw the rising cases and issues across the country. We had additional measures, restrictions put on economic activity, which also impacted economic consumers and businesses' ability to spend money and invest. Even with that increase in cases in that wave, the fourth quarter turned out to be a little bit better than expected. But still, people were concerned that in this quarter, the first quarter, given everything going on, the uncertainty, in the case, in the current wave of cases, that you'd see another hit to the economy, and the first quarter is holding up very well. And so, despite everything, and again, it's not to minimize the fact that there's a lot of pain with a lot of businesses, and the unemployment rate's very high, and there's still a lot of dislocations in the labor market, things have held up much better than anticipated, given where we were back in April and May of last year. And then there's a number of reasons for that. One is obviously there's tremendous fiscal support. We talked about the PPP program. I mean, for all of its, it was a difficult thing to roll out, which I'm sure all of you had a lot of different your own pain stories about trying to apply for the PPP and all the paperwork involved, especially for the bank, for Alan. I'm sure for Alan and Severn, it was a difficult lift, to put it mildly, right? To service all the customers and the PPP loans. And so, but it was a tremendous thing if you think about it. Congress passed an act, and within 7 days, money was out the door to the first recipients, which is tremendous. We normally teach in economics that the monetary policy is more effective because it can be more timely. We can change rates, and immediately the change in rates is going to have some impact on activity. And that fiscal policy, that is federal government spending, those changes take longer, but it was really remarkable that what they were able to do in a short period of time. And I think those payments to households, the extra payments to individuals through the supplemental unemployment insurance payments, as well as PPP, that really helped the economy through the summer and into the third quarter. The Federal Reserve lowered interest rates, did a number of other programs, put in a series of programs to help make sure that financial markets were working well, that there was access to capital. And so all of that, I think on the fiscal and the monetary policy side really helped the economy. But then on the private side too, you had a lot of people, just again, in my conversations with businesses, you had a lot of businesses helping other businesses. Like for example, banks were working with their customers, deferring payments, for example. Commercial property owners were working with their tenants. Similarly, if they had a revenue shortfall and couldn't make rent payments, doing the same thing, making either deferring payments or working with them to just kind of to see what they could do in order to get through the difficult period. The same thing with kind of larger businesses with strong balance sheets. If some of their suppliers or customers were having issues, they were working with them in order to help them out as well. And generally speaking, the way I just talked with businesses last year, those with stronger balance sheets were helping those with weaker balance sheets that were affected. And as a result, I think a lot of people were really concerned about what were the financial implications of everybody having these revenue shortfalls at the same time. It seems like a number of dominoes could have fallen that could have kind of worked its way through the financial system and created a lot of defaults, right? But that didn't happen. And so in that sense, things worked out a lot better than expected. Now, in addition to the fiscal, the support, for those that were negatively impacted, the odd thing is that for many other people, for a lot of other consumers and businesses, they weren't impacted. So many people can work remotely from home. Their income wasn't really affected. And as a result, consumer spending was much stronger than anybody anticipated. So consumer spending, what's really remarkable is that consumer spending on durable goods by November was back to the pre-pandemic levels of February. talking with auto dealers in March and April, I asked them, so what do you think, what do you think sales are going to be for this year? How are you adjusting your businesses based on your sales expectations, right? What are your orders going to be? What are you going to do with inventories? And, people are thinking maybe 13 million, 14 million run rate would be good by the end of the year. We were back to pre-pandemic levels by the fall. And auto sales were tremendous, and inventory issues where they were so strong that, currently we're still having inventory problems in the auto sector. You see the same thing on the residential side. And so the consumer sector has been done very well, in part because some people are unaffected, and another as well as due to the fiscal support through the CARES Act. Where you've seen weakness on the consumer side has been spending on services, and again, that makes a lot of sense. It's those in-person activities, travel, leisure and hospitality. Those things would require people to be close to one another. Obviously, spending in those are down. So where you've seen this kind of a shift in the consumer sector away from services towards goods. But on net, consumer spending was very strong in the second half of the year. And you saw that and across the board, whether it's manufacturing of consumer goods, transportation, warehousing, less to extent retail, but across the board, the consumer sector was very strong for the economy. Where we still have a long way to go, though, is really in the labor market, because tremendous growth in the overall, and then so we had 33% growth in the third quarter, 4% in the fourth quarter. We still year over year we're down slightly from where we were in 2000 from a year ago. But on the employment side, the picture is very different. So we lost 22 million jobs in the economy in March and April, which is, again, just unprecedented and tremendous. Since then, we've gained back about 10 million jobs. 12 million jobs. And so, but still, we're still net down 10 million jobs, which is interesting when you think about it. See, the economy almost fully recovered to pre-pandemic levels or early 2020 levels, just down 2.5%. But when on the employment side, it's down 6.5%. And so the economy has been able to come back and be able to produce goods and services using a lot fewer people. And the question is, what's going to happen with these fewer people going forward? Obviously, a lot of the people that are currently unemployed are in those sectors that have been hardest hit and where employment hasn't come back yet. And so, for example, in Maryland, Maryland employment fell about 350,000 jobs in February and April. And so since then, we've had about 270,000 jobs come back. So we're still short about 84,000 jobs. Actually, no, we're still short about 137,000 jobs. I'm sorry, I got my math a little bit off. And when you look at where those job losses are, it's across the board in all sectors outside of construction. The largest being, obviously, and not surprisingly, in leisure and hospitality, still down, 58,000 jobs. And again, if that's where you work, if your skill set or where you've always worked is in leisure and hospitality, what are the other options that you have right now? And so these people are more likely going to be unemployed. Education is also down considerably just because schools have been closed and there's a lot of ancillary jobs which are tied into education. Some of them might be in private education. Obviously in retail trade, retailers are not doing as well. And so in all these sectors that were hit the hardest, employment fell in February and March and April and came back to a certain extent, but a lot of these people, because there's just not the opportunities, remain unemployed. And until things get substantially better, their job prospects are going to be limited. And then in addition to that, there's a lot of people who just left the labor force, right? So not only people said, okay, it might be the case that there's not a job opportunity for me, but it also could be the case that, I can't work right now because I've got other issues. Perhaps it's a health issue. Perhaps they're just in a COVID environment, going to work doesn't make sense for them because they might have a pre-existing condition, or it could be the case they have childcare issues. And so when you're looking at the labor market right now, whereas the economy rebounded a lot better, a lot stronger in the second half of the year, and there's good indications that that the first quarter is going very well. When you look at the labor market, there's still a huge dislocation that we have to work through, and it's going to take some time to get through there. The unemployment rate in Maryland right now is at 6.3%. We were at 3.3% prior to the recession. It hit 10.1, got up to 10.1, and it's come down a good bit. But still, we have a ways to go in order to kind of fully recuperate the jobs lost and get everybody back into the labor market. And again, that's going to take time. It's going to depend on the pandemic as well as really the school issue. Now, in thinking about, so that's kind of the broad where we are in terms of thinking about the economy, where we've seen a lot of growth, consumer sector, residential, business investment has actually been very strong over the second half of the year. And so the current level of business investment is far greater than it was prior to the recession, and that's a positive sign. And you're seeing a lot of good signs in commercial real estate, obviously, as related to people buying more things online. And so there's a lot of reasons to be positive about the economy. Still need to work through some of the issues in the labor market. And then, so as I'm thinking about 2021, a couple of things. So right now, you're seeing a lot of positive near-term signals for growth. Auto sales were at a very high rate in January. And again, when we look at auto sales, it's a forward-looking indicator because people aren't going to be out buying cars if they're not feeling confident in their financial situation. So it's a very forward-looking indicators. And so the sales rate in January was tremendous. Retail sales came out a couple of days ago, equally strong. We've been watching weekly credit card spending data to try and get a more timely indicator of how consumers are spending. That's holding up well. Other surveys, and then broad surveys of manufacturing and non-manufacturing all point to continued solid growth in the first quarter, which again is important because there's a lot of questions about what was going to happen in the first quarter, given what was going on in the pandemic. Because at the end of the day, obviously a lot of what's driving the overall course of the economy is what's going on in the pandemic. Should cases flare up, you have additional business closures or restrictions, that's going to impact growth. It's going to impact people's confidence and add to uncertainty and impact consumer spending and business investment. But despite the most recent wave and the uncertainty, business investments held up, consumer confidence is held up, and more importantly, consumer spending has remained strong. Now, when I think about the first half of this year and the second half of this year, that perhaps this would be interesting when we get to the Q&A. We can talk about this because I'm somewhat optimistic in the fact that we've seen cases peak in January and they're falling sharply here in Maryland and across the country. And you're also seeing that in other parts of the world. I spend a lot of my time looking at these epi curves, both in Europe as well as here, just to kind of get a sense of the direction of things. And so at the moment, the direction of things is very positive, both in terms of cases abroad as well as cases here. And at the same time, vaccines are rolling out. And so I'm hoping to see over the course of the spring that you're going to continue to see cases come down, hospitalizations come down, and then the vaccines roll out to those people that are most at risk, as well as to those people that are essential. And we should, given that trend and given those trends, one would expect to see stabilizations in those important metrics, cases, hospitalizations, and a low and stable positivity rate. And based on that, I'm really hoping to expect to see that by the end of the second quarter, by the end of the spring, we'll have very good visibility into the second half of the year. And when I say visibility, people will have a better understanding of where we are in the pandemic. And then based on that, it'd be easier for people to think about, okay, given this, what am I going to do in the second half of the year? And I think there's the possibility for very robust growth in the second half of the year based on that. If you looked at some of the forecasts, the FOMC, the Federal Open Market Committee, 4 times a year, they put out projections on for real GDP, unemployment, the inflation rate, and where rates are going to be. And at the December meeting, they were forecasting growth anywhere between 3.5% and 5% for 2021, right? Which is very strong because at an average year, it's about 1.5 to 2. So, and that was before the stimulus package, which looks like it's going to be passed, right? And so I've been expecting those growth rate, and that was before some of the first quarter numbers came in as strong as they did. So I'm expecting that 3.5% to 5% number for 2021 to be revised even higher, right? So that's my baseline optimistic scenario, which evidently is a little bit at odds with the majority of people attending the call. And again, I'd love to get people's different perspective. Now, what are the downside risks to that perspective? Obviously, in some places in Europe, variants seem to have taken hold, and they had a second spike in cases over this fall, winter. You saw it in the UK, you saw it in Ireland, you saw it in Portugal, you saw it in Spain. And as a result, they had to have an extended period on restrictions on activity. So clearly there's a risk that perhaps, we don't see a nice downward trend in cases. Perhaps there's a resurgence, or it stays at a higher level, and or the vaccine rollout could be slower than anticipated. And if that were the case, and so that the pandemic is still more of an issue as we get into the spring, clearly you would expect to see growth will not be as strong in the first half of the year. It would be less visibility, as I say, in the second half of the year, and we'd just still kind of muddle along for a longer period of time. And it wouldn't be, and I think in that case, it would be more like the results of the poll, whereas I wouldn't expect to see much stronger growth until the end of this year, beginning of next year under that scenario. And again, it's highly uncertain because we really don't understand, again, the path of the virus. It's a new thing. And so people are working very hard to try and best understand, how it operates. But I'm very, given that the vaccines are being rolled out, I think we're going to get better at that over time. It started off somewhat slow. And given what we're seeing now in terms of the trends in cases, and the fact that a lot of people have already been infected, and so that by itself should slow things down to a certain extent. Again, I'm somewhat optimistic for the remainder of the year. And I should touch on briefly, and then I'll stop. On the inflation side, inflation's very low right now and expected to stay low. With the second quarter, with the stop in activity, inflation fell, and it's only moved up slightly from that, and we're expecting it to continue to just kind of edge slowly higher towards our 2% target. And based on lower inflation and high unemployment rate, the FOMC has indicated they're expecting rates to stay low for the near term. And none of the FOMC members are anticipating raising rates this year, nor only one is expecting raising rates next year. And with that, I will stop, and I look forward to your questions at the end of the program.
Great. Well, thank you for that, Andy. And also thank you for the optimism. I think, looking at the numbers is one thing, but going out as you do and speaking with the business owners, the folks who are making the decision, gives you that context, which is important. I think you spoke about the monetary aspects and the fiscal aspects and the monies that got injected into the economy. And governments worked well at city, county, state, and federal to move quickly and put money out there. So that was very, very instructive. We're fortunate today. We've got a couple. I just want to recognize folks who've kind of plugged in, the government elected officials who've helped make that happen. So we've got Senator Ed Riley has joined us today. From the city council is Ellie Tierney has joined us. From the county, we've got Amanda Fielder and Jessica Hare have kind of plugged in. And also Sid Saab is with us today, and Senator Sarah Elfis is joining us too. So thank you for your help in getting the local economy moving. So thank you, Andy, for that presentation. And now we're going to kind of move from the macro and kind of start to dive into more a little bit local. And with that, what I'd like to do is introduce someone who's very active and well known in the Anne Arundel County community and beyond, Alan Hyatt. Alan is the chairman of Severn Bank Corp and Severn Bank. As many of you know, Severn Bank is based here in Annapolis. It is kind of positioned as the full service community bank with retail operations, doing commercial lending, has its headquarters in Annapolis. Alan, as he is also involved in real estate development, has a good handle on the real estate market. So he is a graduate of Bryant College and has received his law degree from the University of Baltimore. So with that, I'd like to turn it over to Alan to hear about how we doing locally, Alan.
Thank you, Mark, and thank you, Rob, for your efforts on behalf of the Chamber. It's a great resource for the local business community. I know sometimes it's a thankless position, but good job and keep it up. Yeah, I'm here today as chairman of Severn. We're about $1 billion in assets, located in Annapolis, headquartered in Annapolis, with branches throughout the county from north to south. Probably have 80% of our assets invested in loans in Anne Arundel County. So we're very familiar with the local economy, excited to be a community bank based here in Anne Arundel County. I also serve as a partner in Hyatt and Weber, which is a law firm in Annapolis. I do some land use work in the county. And so, you know, I have my hands full, but very Anne Arundel County centric, I would say. So, you know, I'd start off by saying that the American economy and to a large extent, the Anne Arundel County economy, which mimics the American economy, is going to be fine. It's going to be fine. And I learned that from Mr. Bauer's boss, the chairman of the Federal Reserve, Jerome Powell. He says it will be fine. I've learned that from Warren Buffett, the renowned investor, who says you never bet against the American economy. And so in the long term, it's going to be great. Now we have a few bumps along the way in the short run. And you know, about a year ago, it became clear that this coronavirus that started in China moved to Europe and then to this country and developed into the worst health pandemic in 100 years, severely impacted the economy. As Andy indicated, GDP was down 30%. Unemployment soared, the stock market dropped, and interest rates dropped even lower from the rates that were in place. And there was tremendous uncertainty. It's amazing to me that the economy and the stock market has bounced back as quickly as it has. I mean, it was a precipitous plunge and then likewise on the way back. So if you had the guts to invest in the stock market in April of 2020, you've made a lot of money. And so, you know, again, following the directives of renowned investors, you know, you stick to the program and it will all work out. Locally, businesses benefited, and Severn Bank was very active in what was known as the Payroll Protection Plan, PPP, that the federal government rolled out in 2020. It was interesting because when that happened, it really was the community banking industry that reacted most quickly. The large banks, the regional and national banks, I think were caught flat-footed. You know, I'm not sure, but they just didn't react quickly. And within days of the announcement of that program, the team at Severn Bank just rolled up their sleeves, studied what had to be learned, and began to implement the program. And, you know, there was a panic going on because when that program was first announced, there was a finite amount of funds and there was a limit on the timing of it. And people were really getting worried that they were not going to be able to pick up those funds because of the fact that the money might run out or they would run out of time. And there were desperate businesses during those times, during the initial phase of this pandemic. And people in small businesses needed that money to make payroll, to survive. And I made a lot of new friends during that period of time. We were working literally around the clock to accept these applications and upload them to the SBA. The SBA deserves a lot of credit because they were making this stuff up as they went along, how to do the program. And every day there were new questions that came out and responses from the SBA. And ultimately it worked out, and it was a lifesaver to many businesses in this community. And now we have the second round of PPP that is underway, and we haven't observed the same level of panic or concern, but there are still businesses that need that next shot of PPP money to continue. And the idea is that with the government's assistance, small businesses that need it will survive and maybe limp along until things get back to normal for them. But there certainly have been some segments in our local economy that have been unfazed by the pandemic and in fact have thrived during this pandemic. With interest rates as low as they are, there's been a lot of real estate that has changed hands, residential real estate, and properties have gone up in value. When you are able to get a 3% rate on a mortgage, or even less sometimes, you can buy a lot of house. And there's been a very strong real estate market locally. And the problem, if we have any problem in the local market right now, is just lack of inventory. There's not enough properties to satisfy the buyers, and it's difficult to produce new residential properties in our community and in this county. Land developers are few and far between, and have a rough time going forward to develop lots and build houses. So houses have been strong. People have been remodeling their houses. Folks that are in the home improvement business have done well. Boat sales have been great. RV sales have been great. Our liquor store customers have thrived, and as has our medical cannabis customers. And I will tell you, I think there's a scientific correlation between the pandemic and the consumption of medical cannabis and alcoholic beverages. But I haven't formalized that study yet, but I think that's what's going on. On the other hand, there are some businesses that have suffered. I know we're going to hear from Dick Franyo, but my friends in the restaurant business and in the bar business and in the hospitality business have not had an easy go of it. And of course, their employees are the ones that have really struggled as a result. And PPP has helped some of those businesses and has helped keep some of these people employed. I'm hopeful that the next round will be enough to keep everybody alive and well until business can come back to normal. With the rollout of the vaccines, I think we will see a stronger second half of this year. There's a lot of pent-up demand, I believe, in this economy. While there's haves and have-nots, unfortunately, in this economy, but overall, I think there's a lot of ability to spend in the Anne Arundel County economy, and I think there will be people spending. They're going to want to go out to dinner. They're going to want to go on vacations, and maybe some will not be traveling to Europe, but I bet the hotels in Ocean City do well later this summer, and I think we'll see more tourists come to Annapolis. I think you'll see shorter trips. I think you'll see people staying a little bit closer to home, but they will start to spend when they have the opportunity to do so. And, I'd like to comment, I'm not an economist. I was hoping Andy would put one of those charts up, supply, demand, elasticity of money, all those things. I missed that, Andy. So, but my observation as a local banker is that these interest rates, they will be low for some period of time, but based on what I learned in economics, I don't see how the world can be flooded with a cheap amount of money, government largesse, whatever you want to call it, without having some level of inflation coming back. Now, when that will happen, I don't know, but I'm looking a few years out. It certainly wouldn't shock me to see interest rates go up somewhere down the road, because it's just the way the cycles work. And, when you have inflation, one of the tools that the Federal Reserve has is to raise interest rates. And so, as a community banker, we're very careful not to book 30-year fixed rate loans and stick them in our portfolio. We will originate those loans and sell them to Freddie Mac and Fannie Mae, and we retain servicing. But it's not going to go on forever like this, I don't believe. And it's interesting to me, because when I first started in the business, it was around 1980. Our little bank at the time was paying 10% interest on a passbook account, if you can imagine that. We were paying 10%. Today, on a money market account, we're paying 1/10 of 1%. And that's probably 10 times or 8 times higher than what most of the large banks are paying, which is, startling that that's what's going on. And that has hurt. I've observed that it's hurt the older conservative savers who over the years have shunned investments like the equities market and are afraid to invest in private equity and things like that. And so they like to earn interest on their certificates of deposit. And for many years, we had folks in the bank that were retired. They were getting 3, 4, 5% on their money. And if you worked hard and you saved your money, you had $1 million or $2 million, you were getting 4%. That gives you $80,000 a year in income plus Social Security. You were doing okay. Today, if you have a couple $1 million in the bank, you're earning 20 basis points. It's tough. It is a tough way to go. And that is in part why the stock market is getting driven up, because there's no place else to go. There's really no place to earn the kind of interest or dividends that people have been accustomed to. And the market goes up and the market goes down, and it's not for everybody. So it'll be interesting to see how that shakes out as time goes on, because there will be folks that will be in the market when it drops, and it'll be a little bit of a shock to them. We recently had a investor with a private equity fund that wanted to deposit a significant amount of money with us, and wasn't going to keep it there very long. And it was a 9-figure investment, and maybe 45, 60 days he was going to keep the money with us, and wanted to know what we'd be willing to pay and on interest. And I told him nothing, zero. I said, I'll get you a couple coffee mugs, but I can't get you any interest on your money, because when we take that money and put it in overnight funds, we're getting 5 basis points. That's 1/20 of 1%. So, the market is thriving in part because of the artificially low interest rates. We hope when that changes, it's a slower easing back to more normal rates. But, it remains to be seen how that shakes out. So I'll just conclude by saying that we're in a fortunate location in Anne Arundel County, Maryland. We're close to the Washington, D.C. federal government opportunities. We have our local governments here. We are by the Chesapeake Bay. There's a lot of positives in our economy. And I think that assists us significantly in attracting businesses. I would like to see, I know we have a few elected officials on the line. I would love to see our local elected officials help and get our local governments more proactive in trying to encourage economic growth and development. I know there's a balance here, but it's important. We have customers of the bank. I have clients that are frustrated with the processes in both the county and the city, and I think a little focus is appropriate to try to improve them and let private enterprise produce, because that it's given opportunity, private enterprise will create jobs, it will create economic growth, and will make good things happen. So with that, Mark, thank you for the opportunity to speak today.
Great. Well, thank you, Alan, for those comments, and thank you and your staff for working around the clock to push out those PPP loans. I know I spoke to a lot of our members and businesses. Uncertainty certainly rules, and there were some people freaking out. There's no other way to put it. But what they did find is that they were able to work with community bankers and get things done. So that was great. And I think the second round seems to be going smoothly. So again, thank you. And thank you for participating today. Now we're going to move on and kind of focus in with a large employer here in Anne Arundel County, and also kind of start to make that bridge. We've talked about the recovery and how it may come, and we've heard vaccinations, healthcare, and so forth and so on. And so now we're going to have an opportunity to hear from the President and Chief Executive Officer of the Anne Arundel Medical Center, Tori Bayless. Tori has over 25 years of experience working in the hospital industry. And so I think that has certainly prepared her, maybe not for what we've encountered here. I think Alan called it once in a lifetime health crisis. And the medical center has had to step up in many ways to not only provide the ongoing medical support that we demand as a community, but also take on the responsibility of COVID patients, and now being at the front line, literally, of the vaccination program. Luminous Healthcare is recently been included with the medical center, and it's a great asset that we have here. So Tori has a Bachelor of Science degree from Tufts University and a Master of Health Service Administration from the University of Michigan. So with that, let me turn it over to Tori for her remarks. Tori.
Great. Thanks so much, Mark, and good afternoon, everyone. Thanks to Rob also, and for Jan Wood and her service at the Chamber, and coordinating this event. It's nice to be paneled up here with Andy, Alan, and Dick. There are a couple things I'd like to just share as updates and highlights, and certainly looking forward to Q&A as well. So what some of you may not know, that Anne Arundel Medical Center acquired Doctors Community Hospital in Lanham, Maryland in July of 2019. And with that coming together, we created a new health system called Luminous Health, been recently rebranded as Luminous Health, with Anne Arundel Medical Center and its subsidiaries comprising about 75% of that system, if you will. We certainly remain headquartered right here in Annapolis, and but our system and our care locations span across about 8 different counties. We care for a region of about 1.5 million people, and within the Anne Arundel County geography, again, about 75% of the system represented there. The Anne Arundel Medical Center, with almost 120-year history, founded in 1902, has been through a lot, but I would not say, I guess we were through the 1918 pandemic, but none of us were personally there to experience it. And as much experience as we have and we bring to the table, really nobody was prepared for this pandemic. And nobody was really ready for the economic impact, the psychological impact, the physical impact that it's had in the organizations and across so many different sectors of the economy. It's been tough. It's been a tough year for sure. But interestingly, during the pandemic, Anne Arundel Medical Center actually stood up a brand new mental health hospital over on Riva Road, partnered up with Pathways. We opened the J. Kent McNew Family Medical Center, focused on behavioral health, psychiatric services, and that's right next door to Pathways, which is our substance use treatment facility that's been in operation since 1992. Collectively across Luminous Health, we employ a lot of people. We are a big economic driver for sure, about 6,500 employees across the system, medical staff of about 1,800 members, and about 1,400 volunteers. So we're very fortunate for that service and contributions of our volunteer workforce. We have about 80 care locations throughout the region, in addition to the 3 hospitals. And we also have a number of ancillary and outpatient surgery centers as well. So, when we were setting up this program, the dialogue here was certainly to talk about the impact of the pandemic, as well as where we are with the vaccine program and where we see things heading, and some of the innovation and some of the learnings that we've had certainly through the pandemic. So I would say, from an economic outlook, it's been a very tough year. We were fortunate economically to take advantage of the stimulus dollars and CARES Act money. We're too large a group to qualify for PPP, but there were other avenues that we could be bolstered economically. It certainly didn't cover the magnitude of the lost revenues that we had or the expenses that we were incurring, but helped provide some stability to the medical center. When I think about everything that we're working through, we've been focused on this issue of pivot. You got to pivot and pivot again. And as we've learned about this disease and the science behind it and how it's evolved, if we go back to this time last year, literally like this week last year, is when we first stood up our incident command structures to prepare for the pandemic. And there wasn't a lot of knowledge about what it meant, what it would entail, what its impact would be. And we've run incident command structures on an ongoing basis now for a full year to run the medical centers, to change our operations, now to shift towards a vaccination program. And we know that we need to keep our doors open 24/7, but certainly our business model dramatically shifted, as we know many of yours did. It changed pretty significantly. We activated telehealth while we had the technology for telehealth. It wasn't that popular among our physicians or, quite frankly, the community and patients. But if necessity is the mother of invention, it certainly did become much more widely used during the pandemic. And that will continue, not at the level it was during the height of the pandemic, but telemedicine is definitely here to stay. Although economically, the reimbursement is not nearly as strong as an in-person visit, if you will, but we need to evolve and again, pivot towards that technology. We also had, you think of hospitals, you've got nurses, doctors, pharmacists, techs, clinicians, housekeepers, food service workers, so many different jobs where people are literally in the building. But we also have a number of our workers that shifted, of course, to telework. And we're still running about 10% of our workforce is teleworking, and that's new for us. We haven't had that dynamic within our health system. So that's something we're not just trying to manage through the pandemic, but how do we make that maybe part of our regular new normal and our routines going forward, which of course has an impact on office operations, real estate, and other dynamics of our business. We've had some tough times. So if you think about the pandemic, I think about it in 2 waves. And I was reflecting on some of Andy's remarks. Back in March, April, May, we hit the height of the pandemic, and Maryland was hit pretty hard. New York City was hit really hard, but Maryland was hit pretty hard at that time. But the rest of the country, it hadn't spread as much. And we kind of came out of in the springtime in March, where we were saying, let's try to start to reopen as best we can and bring back the non-emergency surgeries and all of the cancellations and delays that we had to put in place per the governor's orders. And then the summer was a bit of I don't want to say a complete lull, but then came the fall and we had this second surge. And the second surge has been really tough. So when I hear Andy talking about Q3 and 4 and the economic recovery within the healthcare industry and within the hospitals specifically, we really got clobbered in the fourth quarter of calendar 20. and had enormously high volumes. Again, the challenge there is that the pandemic had spread across the whole country at that point. So the battle, if you will, for staffing resources, scarce resources, particularly human resources, really escalated. So, early on, we made some tough decisions, as I know many of you did in your businesses, where we were furloughing employees, suspending our retirement matches, froze wages, cut executive benefits. I know many of you faced those similar decisions. What was going on at the same time, as you can imagine, as healthcare workers, and we talk about these healthcare heroes who were coming to work every day, there was a level of, quite frankly, just fear. And early on with the virus, not knowing its complexity or how it would continue to evolve, fear for their own safety with the quote shortages of personal protective equipment. We had the supplies, but we were paying enormous prices for them, and we had to protect our staff first and foremost. But again, there was a level of fear and concern for their own health and well-being, and then also for their families, and as they would return back into the community. There was also a level of, I would say, psychological impact and burnout, and a level of behavioral health impact as it's been broadly in the community, but on the healthcare workers in particular. Andy talked about some of the unemployment figures, as did Alan, and we had a number of resignations. People who had to leave the workforce for family reasons, their children being at home. Keep in mind, the hospital, we are disproportionately skewed towards a female workforce. We're about 80% female, largely because of our nursing group. And you've heard the expression, I'm sure, the recession being a she session and the impact it's had, but we did lose a number of our staff members. We also had to furlough staff members. People were leaving for a lot of different reasons. We had a number of early retirements going on. So, trying to manage the workforce and always provide, first and foremost for safety and quality care. We were feeling really interesting swings in our workforce as we tried to redeploy and also subsequently retain agency personnel to backfill. So, our revenues are down, our expenses are up, that math doesn't work too well. We had, again, the unemployment rates were up, but we were facing significant nursing shortages through the fall. And this was going on across the country. So as we're trying to retain staff, we were literally paying 4, sometimes 5 times what the typical rates were to bring in staff to be able to continue to run our operations. Similarly, on PPE, unfortunately, there were some nefarious actors out there and some price gouging that was going on, even to the level of counterfeiting. So as we're trying to make sure we have all the PPE, what became evident is that there was no stockpile and that the public health infrastructure was quite strained locally, statewide, and nationally. So a lot of learning there. I talked about the shift to telehealth. We also did have to take down in the springtime our what we call non-emergency surgeries, and that's an important part of the care that we provide to the community. What we also saw is people in the community delaying care, avoiding care, their own fear about the coronavirus, maybe not coming to the emergency department when they needed to, and care getting backed up, if you will. So really trying to get messaging out through all of our channels and all of our community partners that the hospital is safe, ready, and open, and to please come in for the care that you need. Don't delay. We're following all of the protective orders and infection control guidelines. Don't delay care. But we saw that not only in our own backyards here in our own hospital, but we saw those similar trends across the country where people were delaying care. You've also heard, I'm sure, quite a bit about the disproportionate impact that the pandemic has had on people of color and vulnerable communities, low-income communities. I'll talk a little bit more about that when I jump to vaccination, which is something we are spending an enormous amount of time, effort, and resources on now. So we've had to pivot quite a bit. We've made a number of different adjustments, and again, we've been at this a full year now. Our business model is shifting towards partnership around the vaccination programs. You know from the headlines and otherwise that the supply chain for vaccines is quite limited. The demand is very, very high. Everybody, not everybody, but many, many people want the vaccine, and we don't have enough supply yet. We are optimistic as J&J and AstraZeneca come online, Pfizer and Moderna, more doses coming, but we're in the throes now and of planning and have stood up a plan that we've conveyed to the state of Maryland, that across Lumenis Health, across 3 or 4 different sites, that we could operationally set up with staffing, locations, IT, and the like, clinics where we could be vaccinating 8,400 people a day. And we developed a model where we said if we, Luminous Health, assumed responsibility for 500,000 people in the state of Maryland, about 9%, 8 or 9%, that we would stand up these clinics, and that we see our role not just being the hospitals and within the walls of a hospital, but we have a partnership and responsibility, part of our mission, to care for the health of the public and be partnered on population health as well. So as the vaccines become more available, we will continue to partner with the state, the local health departments, and the like to try to get vaccines to people. Right now, across Luminous Health, we have 120,000 people signed up with us who are awaiting the vaccine. And clearly, we're not able to meet that demand just yet, given the lack of supply chain. So there's a lot packed in there. In terms of the recovery and the outlook, and as we look forward, again, the fourth quarter of calendar 21 was tough for us. We had very high volumes of COVID positive patients. We continued to run our elective and non-emergent surgery schedules because we realized in the first surge that people were delaying care, and we needed to adjust and have a bit of a different model. Again, though, I would say we've had an enormous support from the communities and partnerships. As we think about the vaccine clinics, we've had volunteers come forward who are trying to help us with that. We had, during the surges, we had people step forward, and companies in our marketplace that pivoted to create masks and face shields and gowns for us, that they changed their whole business model to support the medical center, to support the work that we do. So we're grateful for that. We're certainly grateful for the generosity and the philanthropy in the community where people step forward to help us through this. We're certainly grateful for the CARES Act dollars as well. But we are operating at a 1% margin. I'm not sure how many of you would be stepping forward to invest in organizations with 1% margins. Now, granted, we are a nonprofit, we are a very large system, but a 1% margin is pretty thin. And we need to rebuild up to 2 and 3% over the next year and a half. So I will close by saying, and agree with Alan and Warren Buffett and the Fed chair, that we're going to be okay coming through this. We're building back. We've pivoted. I'm very proud of the team that has shifted in terms of innovation, and we've developed new capabilities, new ideas have surfaced, and we are enormously grateful for the connections that we have in this community. And I think I'll pause there because I know we want to get to Mr. Franyo and certainly get to some Q&A as well, Mark. So I'll turn it back to you.
Great. Well, thank you, Tori, for that overview. I think folks knew the role that Luminous plays in the community, but I think you've added some more details, and particularly what you've been able to pivot to provide the new service to be able to put those vaccines out there, which I think is analogous to economic recovery. So thank you for all you've done, and thanks for being with us today. Now we're going to move on and talk a little bit about the restaurant and hospitality industry. And Andy, just kind of for you, I'm somewhat new to the Annapolis community. I've learned things. There's a lot of, each community always has special events and activities in its own personality, and Annapolis and Anne Arundel County is certainly that. And it's unfortunate to say that because of the pandemic, the second year in a row, there's going to be a cancellation of the sock burning and oyster roast. And that is an event that happens to kind of mark the movement to spring. And that just shows how serious this is. So, but our next speaker will talk a little bit about Annapolis, the restaurant industry from his years of experience, and also kind of a broader view too. So Dick Franyo is the owner of the Boatyard Bar and Grill. And recently he co-chaired with Stephen Rice, the Economic Development Director of Annapolis, the Mayor Gavin Buckley's Small Business Recovery Task Force. Dick comes with a lot of experience in investment banking, having worked at Alex Brown and Sons for a number of years. He's a graduate of the University of Virginia and has an MBA in finance from Harvard University. And he also makes some pretty darn good crab cakes. So with that, it's all yours, Dick.
Good, thank you, Mark, and thanks for having me. I think as Alan said, the state of the food service business is not good. It was actually not that bad starting out, because when the COVID really took hold, it really the spring, and the county and city allowed many of us that could to operate outside. So you had tents or some kind of outside dining. People felt reasonably good coming out. So our business came off, but not as badly as it might. But then it got cold, and then it got cold, and of course the Naval Academy and all the other things around that bring people, boat shows, they did not take place. So business got really bad. So I think overall our association said statewide we're off 30 to 50%. I think that's about the same for our area. Probably Baltimore and Montgomery County may be a bit worse, but I think 30 to 50% off is really where we are. And think about operating your business at 30 to 50% off. It's a serious thing. Part of the task force that I'm on, I try to stay in touch with people around the area. I was talking to one of my peers. He has really 6 food service operations, really good ones. 2 are off 50%, 2 are off 40%, 1 is off 30%, and his catering business off 90%. So that's the kind of the state of play. So why is that? Obviously, people, many people aren't comfortable going out. If you're in the food service business, you have to space your seats, 6 feet apart between a table. You're at 50% occupancy, but really, generally, the operative figure is at 6-foot spacing. You can have no one standing at the bar, so if someone comes in and there's a wait, they can't stand at the bar and have a beverage. Then you can't have any groups. The max is 6 people at a table. So no birthday parties, no, retirement parties of any kind. If I talk to my peers around, the glass is half full, people think that the best that we could hope for a pickup would be maybe mid-April, because that's really when the weather changes in our area. So I think we're going to be able to go back outside, if you will, and have some tables and make people feel comfortable coming back inside. We've got longer days. Hopefully the virus numbers are going to be coming down. The vaccines are going to be, more people will have gotten them. And maybe at some point, maybe that summer, that we'll be able to have some kind of groups more than 6. So I think the range is, people say April 15th if you're really an optimist, maybe June if you if you're not quite as positive. And in that range, we could see this 30 to 50% figure start trending up. So obviously that's tough. We've talked about the PPP loan. That has been a lifeline. We wouldn't be here without it. And we were able to get the PPP loan, people in our business, the first one. Now we're all applying for the second one. And for our business, the second one's actually better, because in the first one, the amount of the PPP loan was 2.5 times your average payroll in 2019 for a month. In the second one, because our industry has been hit so hard, we actually get 3.5 times your average monthly payroll in 2019. That's for the lodging business and the food service business, because we were hit so badly. So we're all waiting to get the second loan. As Alan says, the smaller banks operate a bit quicker than larger banks. And then beyond the PPP loan, the Anne Arundel County had money for us. We received 2 payments of $7,000 each, which was terrific. And then the state is coming up, going to allow us to not pay $9,000 of our sales tax, and that's coming up. So everything helps us. Statewide, our association says that we're going to see 30% of food service operations close for good, and that means they'll either close and someone will come in and buy them and they'll come out in a different form. I don't see that around our county. I think we're going to do much better. I think there'll be an occasional place that'll close, but I think we're going to do much better. I think there are going to be very few places that won't be able to limp through until business gets better because of the PPP and other benefits. So on the legislative front, a big thing for our industry, and I don't want to just talk too much about it, it's called the tip credit. And our servers, especially places like ours and many others, they really do quite well. They generally make $25 an hour, some more, and so we're able to only pay them $3.63 an hour, but that's not why they're there. They're there to make tips, and there's a movement to pay our servers minimum wage, which could move toward $15 an hour. They're making $25 on tips, and then we're going to have to be paying them, working toward $15. That really causes us a problem. I won't say more about that, but we hope we can fight the tip credit issue. Again, as part of my small business task force, I try to stay in touch with other businesses. The lodging business has certainly been hit. The room rates are down, occupancy is down. Some of the bed and breakfasts around town are starting to pick up. I think more people are trying to come out and get out and about. Retail business, I think Alan touched on that. I think if you're in the sporting goods, or you're in the boat business or fishing supplies, things like that, you're doing well. If you're in the DIY business, repairing your home, you're doing well. If you're selling clothes, you're not doing well, because who's buying clothes? Because you're not going out, and so you're not buying much clothes. I have a fellow that I serve on one of Tori's boards with, who's in the retail business, the dry cleaning business, and the gym business. The dry cleaning business is getting killed. So if you're not going out, you're not taking your white shirts in to be clean. So that's another pocket which is struggling. If you're in the athletic gym business, again, you're struggling. He's off 50%. And again, think about trying to run your business at 50% off of where you were in 2019. It's tough. As Alan said, banks are being friendly, landlords are being friendly. That's allowing a lot of people to get by. I would say one thing, and I think Alan touched on this too. I think the Annapolis, Eastern Shore, Anne Arundel County, Chesapeake Bay area is going to do very well. The trend is now, while it was to move into town, out of the burbs, now you're really seeing the trend is to move really back into areas like Annapolis and the Eastern Shore. So I think we're going to do quite well. As to, the longer term, I think I voted that it was going to be 2022 until we really get back to 2019 figures. But I think at the, later spring, summer, latter part of this year, we should see that 30 to 50% down, start to come back. And again, the PPP loan is going to help us keep our people employed. So I think that's probably my thoughts, and thank you for having me.
Great. No, thank you, Dick, for taking the time to be with us and sharing those thoughts. I think it was interesting to hear the way you looked at certain pockets and how they're doing, struggling. I love the term friendly landlord. I think a lot of folks are all in this together, and we kind of realize the domino effect. So businesses are working with each other to get to the other side here. Well, thank you, speakers. We've got time for some Q&A. I know Tori Bayless has to head out at 1:30, and some other folks have to perhaps go. But let me start. If you have a question, you can put it into the chat room and we'll get it posted. But to get started, first I have a question. This might be directed to the bankers. From Ellie Tierney from Annapolis is, what's driving the increased activity in the real estate market? Is it people coming or people leaving? So maybe Alan, you want to take a first crack at that?
For everybody that leaves, somebody comes, you say. So it works itself out. But I think my view is that there is more demand from people leaving urban centers to come to places like Annapolis. I think there's a desire to, I don't know if you would call it the suburbs, but I guess we're a suburb of Washington, D.C. And if you're living in Washington, D.C., Annapolis is more appealing. And I think and it's not just Washington, D.C., it's other urban areas. I think you're finding a movement toward the small towns and communities and suburban areas away from the urban areas. So I think it's being driven by that. And of course, on the lending side, there's a lot of refinances going on too. I mean, it's people that haven't refinanced, or maybe they've already refinanced once or twice, but it's pretty compelling if you can get a sub 3% interest rate.
So, okay, well, thank you for that. Let me ask Tori a question, because I know she'll have to head out. In your presentation, you talked about the challenges that you have on the employment side, particularly shortage of qualified personnel and increased wages that you might have to offer. Do you see that kind of leveling off, or is that a trend that you think may continue in the latter part of this year?
Yeah, so it's a great question. It's, obviously this is a supply and demand issue, but we have seen the COVID positive numbers improving in Maryland and across the country. So hospitalizations are starting to go down now. Fortunately, the death rate is going down. The positivity rate is going, in terms of the testing, is going down. And of course, the vaccination program is launching. So we're not at those peak numbers that we were in the springtime, nor in December, we were quite high again. So the numbers are starting to come down. And as that demand for excess personnel, and if you came to our Anne Arundel Medical Center campus, you'd see tents and annexes set up. We had to stand up additional real estate. We converted conference centers and eateries for the surge. Fortunately, it didn't come to the extreme we thought it would, but it was a lot. So as the numbers start to return a little bit more to normal, I think that the supply and demand curve around those personnel will ease a bit. But through January, we were paying pretty high rates to bring in agency personnel. So I'm optimistic that it will get better as the supply and demand curves kind of correct a bit as the COVID hospitalization numbers continue to decline.
So, okay, well, hopefully that does, because obviously critical personnel there. There's a question that came in. I'm not sure who it's from. It's from a phone number, but I guess it's geared towards Andy. It talks about the proposed stimulus bill and whether it is enough and should it be more directed to certain areas, and it has state and local governments as a potential area that should get some more funding. So Andy, what do you think?
Geez, so, because I don't think it's finalized. And so I'll just say, I mean, the more targeted that is, the better. And so like the Maryland bill that was just passed today, I like the fact that it identified those households that, lower income households by, focusing on people that have received the EITC credit in the past. I think that's positive. You want to target, as Alan was talking about, we've got a lot of businesses that were hit hard, as well as what Tori was talking about. There's a segment of businesses that, which prior to this were profitable businesses that, had good revenues, but because of the nature of the pandemic, the nature of the shock, have been struggling and continue to struggle. And it's just, trying to get them to the other side of this. And so with the vaccine, one could say that, you could kind of, and I've heard this from business, there's a light at the end of the tunnel, and we just need to get them there. And so the degree to which you can focus it towards those businesses that are still facing revenue shortfalls that, again, are still 30 to 50% off if you're a restaurant, or in some places, if your hotel equally off, or if you're an entertainment venue that's shut down, the more targeted, the better. Both of them for the business side and on the household side. That's certainly true.
So, okay, well, thank you for that. Hopefully that'll move its way along. And yeah, we did see some quick action here at the State General Assembly to get that bill done. And so again, additional stimulus helping, build that bridge to the other side. So just looking, before we were getting ready to wrap up here, any other questions? If anybody wants something from the panel, if they can get that into the chat box. If not, well, the good news is, looks like we're going to be on time in getting ourselves wrapped up by 1:30, and we can move on to the rest of the day, and hopefully not any major snow events there. We want to thank you, the speakers, for taking the time to join us today. It has been insightful to hear from Andy on a kind of a macro perspective, and then from Alan, Tori, and Dick on about some particular industries and how they all kind of come together and make up the Anne Arundel economy to a large degree. We will be back again with a leadership luncheon series in April. We'll be doing a recap of the legislative session, and we'll see where that's the state legislature to see where we are. And then that's in April, and in March we'll have Mayor Buckley as our speaker. So again, I'd like to thank everyone. I wish you good health and safety, and double safety again today if you have to venture out onto the highways. So have a good day. And again, thank you for coming, and thank you for your support of the Anne Arundel Chamber of Commerce. Have a great day. Bye all.